What's up, guys? So I just sat down to do my supply and demand zones for tomorrow. I realized it's early in the month. There's a lot of new people in the Discord, and they're probably wondering what the hell the pictures that I'm posting actually mean with these red and green boxes. So in this video, I'm going to show you exactly how I draw supply and demand zones. Not how to draw them, because it is a little bit of an art form. I learned it from Carmine Rosado. Great job, buddy. The videos are freaking sweet, man, and I've been using it and I love it, but I want to show you exactly how I'm doing it. I want to show you the different ways. There's really, like, the biggest question I get is, where do you draw the boxes as opposed to the body of the candle, the wicks of the candle? How are you using these as stop losses? I want to just break down everything that I'm doing with supply and demand zones and how I'm using the strategy to be successful as a new trader. I've only really been trading for 4 months and using supply and demand for a couple weeks, and it's blowing my mind. And we can get really technical with fancy names and vocabulary, guys. I'm a simpleton, right? I like to take confusing things and make them really, really simple. So I'm going to talk to you in layman's terms. So I apologize to the veterans if I'm not using proper vernacular and vocabulary. I'm going to just be talking to regular old people trying to learn a new skill or a new hobby. That's what I'm doing. And first and foremost, these guys are not indicators, and they are slightly different than support and resistance. What I mean is, just because a stock is coming out of supply doesn't mean that I'm going to buy puts. And just because a stock is coming out of a demand zone doesn't necessarily mean I'm going to go long. There's price action, there's volume, there's other things that are going to be associated with this. It just tells me kind of the where. It doesn't tell me when. It piques my interest. Supply and demand zones are areas of interest. They are areas of interest because they are positions where we have an instability of buyers and sellers, supply and demand, right? We either have a ton of buying coming on out of demand, and we want to try and catch on to that wave, or we have a huge pullback or a sell-off out of supply, and we want to try and buy puts and go short to that side. So our job is going to be to look for these imbalances inside the market. And to do so, I'm going to start on a very, very large time frame, and I'm going to focus in. Right? I'm going to start big, probably on the daily chart, and work my way in. And I'll do this with the stock that I'm doing right now. Here's Inside Webull, guys. It's the platform that I trade on. I happen to love it. If you like it or you want to try it, I'm sure there's links down below. They're giving it away. I really love the platform. But to make my life easier, guys, I just trade two things, the QQQ and the SPY. It allows me to understand price and volume. It allows me to just understand everything that's going on with the stock. And the more I understand, even with these supply and demand zones, it makes it much easier. And then we get in the Discord and we can each fine tune them together as like going out and hunting together. It's really, really, really powerful what we can do. So I just did SPY. I'm going to do QQQ with you together. This is a nice blank slate. There's nothing on here, and it's literally walk through my entire process and show you exactly how I'm drawing these zones. So I'm coming out to the daily chart first, and that's pretty much going to give me an overlook of the stock. We know the stock is pretty bearish. We had a nice bull run. It's been kind of basing right now, and it just kind of flushed out. That's really what we're going to be looking, but on a much smaller time frame. We're going to be looking for periods of rapid growth, and then a base period and a reversal, or a period of a pullback, a basing period, and then a reversal back to the upside. That's what we're going to be doing. And at this daily chart, this is really just going to allow us to make very, very general predictions, okay? This is not going to be anything crazy. I'm not going to go back too far, right? Because the longer these zones are in play, we're going to see, the less valid they become, the weaker they become, and the more times that the shares go through the zones also is going to show some more weakness. A great example of that can be shown with my supply and demand zones inside SPY. It's looking like this one supply will now be demand. Once I said, it tested it here, way back on 218. It came up, it played around in a bunch, 225, pulled out, came back, tested it again, pulled out again, tested it a fifth time. Now by the time it comes up again, it's been used so much, right? SPY pretty much cut right through it. Now we're having a little bit of a basing period. So there's a very, very good chance that once was supply will now become demand because it's an invalid supply zone and the markets are starting to trend back up. Buyers are having a little bit more control in the market. That doesn't mean we're not going to draw zones from a while ago. It just means that we're going to understand and know the moment, right? Use the context that we're given to change them as need be, right? This is a living, breathing thing that's going to get updated not only intraday, but at the end of the day and before the morning as well. Day trading is not something you could just sit down and like casually do. There is a lot of work that goes into it, and most people fail, not because this is gambling and this is ridiculous. From what I'm seeing, it's really just because a lot of people don't have the time to put in to really set themselves up for success. So starting very broad, right? This is a broad brush with a 1 day timeline. Each candle is 1 day. We see that we had a period of rapid growth, followed by a basing period, followed by a flush to the downside. So what I'm gonna do is I'm gonna call this the supply right up here. I'm gonna make this a supply to the downside. Now, here's where like things get confusing and where it can be a little bit of an art. You could be super conservative with your zones. They could change. You could be risky with your zones. Out of all the things I've seen on how to draw them and where to start and where to finish, I think if there's one consensus, it's that when you're drawing a supply, the top of your supply zone is going to be the tallest wick inside that basing period. Inside this basing period, they're going to give me the high of the day, so that's where it's going to begin. So if I zoom in here, what we'll see is the lower part is really where the risk comes in. The tighter your zone, the less risk that you have, because we're going to use our zones as our stop losses. If it breaks above that supply, that's our stop. Well, if your stop is really thick, you have a lot of room for that option to go up and down without breaking above the top of your supply. So start at the top. Now, if you want to be low risk, okay, you are going to take your candle, you're going to take your zone and bring it right to the top of a body, of the highest body in that zone. Sometimes it's not on the same wick. The wick and the top of the body are not always in the same zone. Sometimes they are, but that would be a very, very small zone, okay? We'd go from the top of a body in there to the top of this wick. I would draw this across. I would make this the color red. I like to just make it a little bit faint, and then I would lock it. And what we could do, now that I can see this, I'm going to bring it out a little bit, unlock it so I can move it. That would be my supply zone on a 1 hour time frame. And you can label it if you want. It's really up to you. I don't tend to label them just yet. Maybe I will in the future. But this is a very, very, very tight supply zone. For me, I like to go a little bit more risk, not super risky, but a little bit more risk. So I'm going to bring mine down to the bottom of the lowest body in the base, right? So this was the highest body of the base. I'm going to bring it down to the lowest body of the base, which is right here. So I'm going to bring my zone. This is going to be a more practical supply zone for how Brad's doing it on a regular basis. If you want to be even more risky and make an even bigger zone, you'd go simply from wick to wick. So when you're drawing your supplies, where to start and where to finish them, highest point on the highest wick is the top. Then you decide the highest body in the base, the lowest body of the base, or the lowest wick of the base. That's really, really up to you. I don't really see anything that's a huge supply. I mean, a huge demand. Maybe right here, we did have a sell-off and then a little bit of a basing period. So for right now, I'm going to draw that in as a demand, and I'm going to go from the lowest part. And like I said, I like to go to the body inside that base, and I'm going to put this here. Now, this was an area where it bought out, so I'm going to call this demand. Now, looking at it right now, we see that, yeah, look how many times this has been used up, right? There's a very good chance that this is no longer a demand to the upside, right? It kind of came through and tested it and dropped all the way down to 318, but those are things that we're going to see as we start to focus down. So let's start to do that now and focus and see if anything changes on a more smaller time frame. On a smaller time frame, we can see exactly this play that would have played out quite nicely. We would have broke supply, we would have tested, and then we would have had a great position. This is an awesome setup for me. Coming out of a zone, a retest, and flushing back down. This is ideal right here. That would be the play that I would have made down into this demand, and then this demand would have pulled out. You wouldn't have entered here, right? Because you wouldn't want to chase. This was probably the end of the day, so you really probably would want to stay away from that. It really depends on your play, but we see there was a lot of chop going on in here, and we're not too sure what was going on there or even what was going on down here. Those will be zones that I'm just going to focus on as I shrink down my timeline. So next I'm going to go to the 1 hour time frame. We can now see in the 1 hour time frame this is a little bit clearer picture. This definitely shot up, came back down, and then there was this basing period, and then it shot back up. So for now, what I'm going to do is I'm going to say that this basing period right here led to a new demand zone. So I'm going to put on a smaller time frame a new demand zone. I'm going to go from the lowest the lowest wick up to the highest body, and I'm going to pull that across. Can bring that actually down just a little bit. And then I'm going to make this blue as well. And you're saying, okay, well, Brad, they're overlapping now. What the hell does that mean? Generally, if we have an overlap, it just shows a little bit more strength on different time frames. But like I mentioned before, this zone has been used a bunch. So I'm pretty confident that I'm probably going to end up deleting this zone and not even using it for the future. Now that I have that, I'm going to kind of come down here and I'm going to look for a new demand, right? If this demand is going to be gone and this becomes maybe a supply, then this might become a demand. This is, like I said, a work of art. I'm going to look down here. I really want to shrink this down in a time frame down to 30 minutes and see, okay, we had a little bit of downside movement. This was the end of the day. That was a little bit weird. If I go down to the 20 minute, that's probably going to paint a nice little basing period for me there. And yeah, here it was. We had this basing period that led into a strong period of selling. What I'm going to do is I'm going to consider this the basing period, and this is really up to you. I'm going to come to the highest body inside the basing period. I'm going to come down to the lowest wick inside that basing period, and I'm going to pull across. This will be my demand, and this is on a 20-minute time frame. This is the point at the 20-minute time frame where I'd start to say to myself, all right, I don't really think that this is a valid zone anymore. So what I'm going to do right now is I'm going to delete this zone. And like I said, this is really going into my play for tomorrow. I'm not reacting. I'm saying, okay, going into tomorrow, what do I want? So I'm going to delete this zone right here. What that does is now leaves me with a little bit different of a picture. We see here's the zone that was drawn, but we kind of pulled up, but then we had more of a flush to the downside. So now it looks like from here that this actually changed to a supply. So now going in tomorrow, I'm going to ask myself a couple of things. I might even break this down a little bit smaller, and we see we had a period of buyers in control, and now we're kind of like just chilling out, hanging out here. There's a very good chance that this is going to become a zone in the future, and I'm just going to be watching it. Right now, this is not something that I'd be able to enter because it's not giving me any of the confirmations that I want. Like I said, I would like this to be traveling into a zone, get a test, and then pull out. So right now, this looks very, very good to me, but I don't really know what's going to happen. Even if I go down to the 10-minute time frame, really nothing is saying that this is going to be traveling up or down. So if we open like this tomorrow, what I'd be saying with my zones is that I'm going to wait and see, does this travel up into supply, get a test, and pull back down? I'd be looking to buy puts there. If not, I'd be looking to hang out, knowing that something in here is probably going to become a demand or supply, depending on how this flushes out. There's another very good chance, right? We could add extended hours in here and kind of see what's happening in the overnight session and see if that really helps us. But not really, not too much, right? What's going on is it's pretty much staying where it was. And like I said, you can fine tune this, talk to your boys, find out what they're doing. It's like, really, every morning in the Discord, we just go through what our SPY supply zones and demand zones are, and we can see there's a lot of stuff going on here. I would probably even just put this in as kind of a key level to watch from here, acting as resistance. We'll see if now that can become a support. That might give me a little bit more confirmation to that side. So that's essentially all I do, and I do the same for the QQQ and the SPY every day. If we look at moving into tomorrow with the SPY, so these were zones that we had already drawn, and this shows like the more a zone gets used up, the less value it really holds. But I'm going to be watching to see if in the morning time where this opens up, if we can get a little bit of a test. Like I said, I think it would be very, very weird to see this come up and use this zone again, but you never know. This would be my next target for an exit on puts. But what I'd like to see is maybe a little bit of breakout. And then when I get some breakout, we'll be looking up to this supply that I've drawn way back here from 216, guys. That's essentially all I do. Leave a comment. Let me know. This is a new channel, so I'll definitely be checking the comments. I'll get back to you. If you have any questions about this, what I'm doing, let me know. If you want to hop in the Discord, I'll leave that link down below. New trader, $5,000 portfolio. Leave in the comments, do you think I'm going to blow this thing up? What date you think I'll blow up a $5,000 account? Or let me know when you think I'll double it to 10 grand. I'll catch you guys on the next video.